Home price growth versus appreciation. What's the difference and why does it matter? Stay tuned. Thanks for watching this week's video. I'm Shirley with Shirley's Real Estate Group, John L. Scott, and this is the BS Real Estate Show, buying and selling real estate, that is. In my last video, we broke down the 2025 home price trends, where they're headed and what buyers and sellers need to know. But today we're taking it a step further. We're diving into home price growth versus home price appreciation. What's driving them, why they matter, and how they impact your real estate decisions. So let's dive right in. Home price growth has remained relatively flat. Looking at the national month-over-month home price growth, we can see that the market has remained relatively flat with minor fluctuations throughout the year. According to Case-Shiller, home values have been steadily increasing at a slower and more predictable pace since January. February saw the largest spike at 0.5% growth, while other months hovered around 0.3%, with slight dips in June, 0.2%, in July, 0.1%. This data highlights what some experts describe as a sideways market, one where prices aren't experiencing drastic swings, but instead are moving along at a modest, stable pace. For buyers and sellers, this kind of market suggests that home values are not dropping, but also not soaring at unsustainable rates, which creates a more predictable environment for making real estate decisions. Looking ahead, we'll dive into what forecasters are predicting for home prices moving forward and how factors like mortgage rates could impact the market. Year-over-year home price appreciation. Looking at the year-over-year home price appreciation across the 20 largest cities in the U.S., we can see varying trends in different markets. Some cities have strong price growth while others are experiencing a slower pace of appreciation or even slight declines. For example, in our area here in Seattle, home prices have grown by 5.41% year-over-year, putting it in line with the stronger appreciation markets. This is important because Seattle has been a competitive and high-demand market, and even with shifting conditions, it continues to see steady price increases. Here we can see some interesting trends. There are 7 markets where home prices have increased by more than 5%, including New York, Chicago, Cleveland, Las Vegas, and here at home, Seattle. However, the majority of metros are seeing appreciation rates in the 3 to 4% range, with some areas falling below 3%, such as Dallas at 0.95% and Denver at 0.89%. Tampa is the only market experiencing a slight decline at minus 0.37%. So what does this all mean? We're entering a different phase in home prices. Over the past few years, many buyers stepped back due to skyrocketing home prices and rising mortgage rates. Now, with appreciation settling into a more sustainable pace, buyers may start to feel more comfortable about re-entering the market. Home prices are growing at a more normal pace. Looking at the Case-Shiller 20-City Composite Index, we can see a clear trend of home price moderation that buyers should keep an eye on. This chart tracks home price changes from January 2019 to November 2024, and it tells an important story. Back in 2019 and early 2020, we were in a steady, normalized market with moderate price growth. Then came the pandemic and the post-pandemic housing boom, where record low mortgage rates fueled massive home price appreciation. That surge peaked in 2022. But as mortgage rates climbed, we saw a cooling off period, leading to a more balanced market. Now home prices are settling into a more sustainable pace, slightly above pre-pandemic levels, but without the extreme spikes of recent years. This is great news for buyers who have stepped back due to rapid price growth and rising rates. The market is stabilizing, creating better opportunities for those considering home ownership or those who've just been looking to make a move. Zillow said prices are expected to rise this year, though most will do so more slowly than they did last year. Slower growth is good news for buyers who have locked in their budget and are saving for down payments. So here's the big question. If mortgage rates start to dip, are you jumping back in or still waiting on the sidelines? I know everyone's situation is different, and I'd love to hear where you stand. Drop your thoughts or any burning real estate questions in the comments below. If you enjoyed this content, don't forget to like and subscribe for more real estate insights. Well, that's a wrap, and I'll see you in the next video.